There's a single paragraph buried in a corporate filing that Wall Street never talks about. It's not hidden, it's public. Page 47 of a 10K report, one sentence that admits something most investors will never see coming. Disruption to our operations in Southeast Asia could materially impact our ability to fulfill customer demand globally. Sounds corporate, sounds boring, but translate that legal language into reality, and it actually says this. We have built our entire supply chain inside a jurisdiction where we have zero legal protection. And it's not just one company, it's an entire category of American business that has handed operational control to a foreign government, willingly, methodically, over 30 years. Because the profit margins were too good to resist, today we're going to trace the actual mechanism, not the headlines, the specific leverage points, because when this unravels, it won't be gradual, it'll be overnight. Most people look at their portfolios and see a ticker, revenue growth, earnings reports, analyst upgrades, a brand headquartered in California or Seattle, a CEO speaking English at conferences. What they don't see is the operational reality. Take Tesla. Half of Tesla's production comes from its Shanghai Gigafactory. Not 10%, not 30%, 50%. Model 3 and Model Y cars, the core of Tesla's revenue, roll off Chinese assembly lines. And China isn't just production, it's 25% of Tesla's total sales. In 2023, over 600,000 Tesla vehicles were sold in China alone. Remove that, and the company's growth story collapses. Tesla cannot hit its global targets without Shanghai, and Shanghai operates under Chinese Communist Party jurisdiction. Apple is even deeper. 95% of iPhones are assembled in China. Foxconn, Pegatron, and the entire manufacturing ecosystem sit within Chinese borders. But it's not just assembly. China is Apple's third largest market, generating $72 billion in annual revenue. Tim Cook has spent a decade cultivating relationships in Beijing precisely because Apple cannot function without China. The supply chain, the market, the manufacturing capacity, all of it runs through the Chinese system. Nike relies on China too. 90% of its products are manufactured in China and Southeast Asia, with China as the anchor. Factories, contractors, logistics networks, everything is integrated into Chinese infrastructure. China isn't just production, it's Nike's fastest growing market, over $7 billion in annual sales. Remove China, and Nike loses both its manufacturing base and growth engine at the same time. Starbucks operates 6,000 stores in China, its fastest growing market globally. The company opens a new store in China every 9 hours. The next decade of expansion is built entirely on Chinese consumer growth. General Motors, 40% of global sales come from China. In 2022, GM sold 2.9 million vehicles in China compared to 2.2 million in the United States. China is GM's largest market, with 10 joint ventures, factories, supply chains, and distribution networks embedded in the Chinese system. GM cannot survive as a global automaker without China. Boeing sells more aircraft to China after the US government than to any other country. Chinese airlines operate over 1,500 Boeing planes and have hundreds more on order. Remove Chinese demand, and Boeing's production lines cannot maintain scale. Recovery from the 737 MAX crisis depends on Chinese orders. Qualcomm earns 65% of revenue from China, selling chips to Chinese manufacturers who produce phones, tablets, and devices for global markets. Remove China, and Qualcomm loses 2/3 of its revenue. Combine the market cap of these 7 companies, and it's over $3 trillion. Every single one operates inside Chinese jurisdiction, where the government controls the legal system, regulatory framework, and physical infrastructure. The mechanism for control isn't theoretical. It's real, legally available, and precedent exists. China can ban sales, nationalize factories, or cut supply chains overnight. In 2016, South Korea deployed the THAAD missile defense system. China responded not with formal sanctions, but with regulatory pressure. Lotte, the South Korean conglomerate that provided land, suddenly faced inspections and violations. 99 stores closed within months. Tourism from China fell nearly 50%. Lotte lost $1.4 billion and exited China entirely. Apply this to Apple. Beijing could declare iPhones a national security risk. Regulators impose new compliance rules, App Store approvals delayed, employees of state-owned enterprises barred from using iPhones, social pressure builds, Chinese consumers switch to domestic alternatives, Apple loses $72 billion in annual revenue, and Apple has no legal recourse because technically nothing was banned. Regulatory enforcement alone achieves the result. China can also nationalize factories under its national security law, with compensation determined by Chinese courts. Tesla's Shanghai Gigafactory, worth $5 billion and producing 750,000 vehicles annually, could be seized. Compensation might be a fraction of its value and production handed to a local manufacturer. Tesla loses half its manufacturing capacity overnight. Recovery takes years. Finally, China can cut supply chains. It controls 60% of global rare earth mining and 85% of processing. Essential materials like neodymium, dysprosium, and europium are critical for EVs, electronics, and aircraft. A restriction or export delay could halt production. Precedent exists. In 2010, China restricted rare earth exports during a territorial dispute with Japan, and prices spiked 1,000%. So if the leverage exists, why hasn't China pulled the trigger? Because destroying these companies would destroy China too. This isn't cooperation. This isn't friendship. This is a mutual hostage situation. Both sides hold guns. Both sides know firing means dying. The standoff holds not because it's stable, but because neither side can afford to move first. China needs foreign direct investment validation. Tesla and Apple signal global capital that China is safe, stable, and reliable. Every other multinational watches. Success attracts $163 billion in foreign investment in 2023 alone. That capital funds development, jobs, and infrastructure. Technology absorption is the real prize. American companies transfer knowledge through joint ventures, training engineers, and building supply chains. Tesla didn't just build cars in Shanghai, it transferred battery and manufacturing expertise. Apple trains engineers in precision manufacturing, quality control, and logistics. China isn't just hosting companies, it's absorbing their capabilities. Kick them out too early, and technology transfer halts before it's fully replicated. Chinese companies also need access to global markets and dollars. Qualcomm chips, Nike products, GM operations all integrate China into global commerce. Sever the connections, and Chinese firms lose access to components, technology, and customers they cannot replace domestically. The United States needs China too. Apple cannot mass produce iPhones elsewhere. Tesla cannot hit production targets without Shanghai. Nike cannot replicate supply chains fast enough. American consumers rely on Chinese manufacturing for affordable goods. Remove China, and prices spike 20 to 30% overnight. Politically, that's impossible. This is the mutual destruction equation. China needs investment, technology, and dollar access. The US needs manufacturing, supply chains, and price stability. Both sides are trapped. Both sides know it. But the equilibrium isn't permanent. China is actively building domestic alternatives. BYD replaces Tesla, Huawei replaces Apple. Rare earth processing expands. With each year, China depends less on American companies. Once dependency drops below a threshold, Beijing can absorb the cost of cutting ties. Then the standoff breaks. And when it breaks, it happens fast. There are 3 triggers that could shatter the balance: Taiwan, technology restrictions, and financial shocks. Taiwan is the tripwire. Military conflict over Taiwan ends the standoff immediately. The United States and allies would impose comprehensive sanctions, asset freezes, export bans, and secondary sanctions on companies doing business with China. In that scenario, American companies must choose sides. Choosing China means losing US markets, capital, and technology. Apple cannot sell iPhones domestically while manufacturing in a sanctioned China. Tesla cannot list on NASDAQ while operating under Chinese control. Companies will be forced to exit or be banned from Western markets. Technology escalation is already happening. The US banned advanced semiconductor exports in 2022. China responded with restrictions on critical materials like gallium and germanium, Full escalation would halt US tech exports entirely. Beijing could retaliate by targeting American consumer companies. iPhones banned, Tesla operations restricted, GM and Starbucks forced to divest. Finally, a financial crisis could trigger the mechanism. China's property sector holds $5.8 trillion in debt. Local governments owe trillions in hidden liabilities, and youth unemployment exceeds 21%. A systemic shock could force China to seize foreign assets, nationalize factories, or redirect public anger at foreign companies. These triggers aren't isolated, they cascade. Military conflict triggers technology bans. Technology bans stress the economy. Economic stress creates financial crises. The system is fragile. So, what do you do with this knowledge? First, audit exposure. Identify companies where revenue, manufacturing, or supply chains are China dependent. Second, rebalance concentration risk. Reduce positions where exposure is high. Third, consider structural beneficiaries. Firms in Mexico, Vietnam, India, and US defense contractors may benefit from shifts. Fourth, build non-dollar hedges. Gold, real assets, or diversified currency exposure protect against monetary instability. Fifth, monitor triggers. Taiwan, semiconductors, and China's financial system are early warning indicators. This isn't about panic, it's about seeing the pattern before everyone else does. For 30 years, American companies bet efficiency over control, assuming interdependence prevents conflict. That worked, until dependency became asymmetric. Now leverage exists, and leverage will be used when conditions align. The companies we discussed, Tesla, Apple, Nike, Starbucks, GM, Boeing, Qualcomm, are exceptional businesses. But they are hostages in a geopolitical standoff. When the standoff breaks, markets will reprice them in minutes. By the time it hits the headlines, it's too late. The only edge is recognizing the pattern before it becomes obvious.